Hello, everyone. This is Socrates with Tyler on the Hyperwave channel. Today, we are going to be taking a look at Bitcoin and a quick look at Ethereum, and then we'll be diving right into the stock market and gold. So plenty to talk about today. The stock market just closed its weekly candle, and gold is getting ready to close its week. And while testing through some major areas of resistance, seeing where it will close has been very important to us these last couple days. So we are very excited to come to you today and analyze the weekly closes of the major markets.
Terrific. Hi, everybody. We thought yesterday some pretty interesting things were happening. We wanted to wait until today, and there was almost no give back. The stock market didn't really do too much. Gold held on to all of its gains, ran all the way up to 1420 at one point, and big things going on with Ethereum and Bitcoin. So what we're going to do, I'm going to give a little explanation of why we went all in on the U.S. stock market today. We were 50% in up until this point, and also why for the first time in several months we got back into gold. I'll explain what we're buying and what we're thinking by looking at some of the charts. But first, I think all the action has really been in the crypto market, and it continues. This is really a new breakout move on the stock market, a new breakout move on the gold market. But Bitcoin really broke out from my perspective all the way back at the 6,000 level, and hasn't slowed down since, led, as Socrates has pointed out, by Litecoin up through most of that resistance. So that's going to be interesting. We're going to get into that right now, and I will turn it back to Socrates.
All right, I will go ahead and pull up a couple charts. Sharing my screen now. All right, so just taking a look at the channel that we are currently appear to be breaking through the top of, and this has been very important to me, basically because of how well it appears to be lining up with this previous action and what happened after breaking through the top of that channel. For people that have been following me for a little bit, you'll know that one of my favorite indicators is breaking through the top of a bullish parallel channel. That indicates to me that a big move could be on the horizon, and that is exactly what we saw back in here. Back in the beginning of May, we were testing through the top of this boundary, fell back in it, but quickly found support and formed this bullish sort of flagging type of pattern where there is horizontal resistance and a higher low following this move here. And that is what formed basically kind of on top of the top area of this channel. And after it was able to break through there, it really took off into a big parabolic move that took the price from about 58 up to 83 in the matter of, let's see here, about a week. So that was a huge move that followed breaking through the top of this channel. So something that has been interesting to me, aside from how well the channels match up, is kind of getting a similar pattern while testing the top of the channel. So here, back in here, this occurred after kind of breaking through, coming back down, dancing around that boundary. Here, we're getting a very similar pattern, but occurring right below the boundary and breaking through the top of this horizontal resistance coincided with shortly thereafter following through to the top of this area here. So we see we have a rally, pullback, another test of horizontal, and another pullback. And then that's basically what happens here. Rally up, spike down, back up to resistance, come back down, create a higher low here, higher low here, which is what gives the sort of kind of flagging sort of pattern. So that is something that I have been paying very close attention to as price has been forming that similar pattern. Yesterday, we talked about how breaking through the top of this was more important to me than being on a red 9 and I believe a combo 13 and an aggressive 13, if I'm remembering correctly. So here we see aggressive 13 and a perfected green 9 that I thought shouldn't even get a one candle correction, because if that were to happen, it'd bring us right back into this range, and I did not want to see that. I wanted to see follow through after confirming this bullish pattern. And now I am looking for a similar sort of follow through that we got last time, which was this big sort of parabolic move that happened in a very short amount of time. So that is now what I'm going to be looking for, and kind of start to see something along those lines, something like that. And then we'll be zooming out and looking at the next major areas of resistance. I am not really seeing a whole lot here at 10,000. I do think that we should break right through it. If the price does pull up short of here in the next couple of days, then I may reevaluate. But from what I can see right now, being that we are just breaking through the top of this channel, or it sure looks like we are, and the action that followed last time, I'm not expecting this resistance to hold right here. And if it does, we may just consolidate below it for a few days. So really, I'm going to be looking up into the next major area of horizontal, which is all the way up at the 11.5 area. And that is what makes most sense to me, is a quick move up there, breaking through the $10,000 area. And just because I say that that's what I expect, and that's and what makes most sense to me, and it's a significant increase from the current price, that does not mean that I would be buying right here. This definitely is resistance, and the entry was back in here when this bullish pattern was broken. I mentioned that I didn't take that entry because I was already fully entered for the exposure that I wanted, so I passed up on that. And now, just because I'm saying that I'm expecting higher prices does not mean that I think this is a spot to buy. So just a couple other things to take a look at, as we are now on a green 8, seeing the TD get to a 7, 8, or 9 at a major area of horizontal is something that is very important to me. So we will be keeping an eye on that. And the other thing that I always like to take a look at when determining strength of trend versus exhaustion is the ADX. The average directional index in the green represents a strong trend, and prior highs help me to identify an exhausted trend. We see back in here when we were in this channel back in here, we got higher high, higher high, higher high, higher high. Each time it formed a higher high, that's when it was time to be on the lookout for exhaustion. And coming back and finding support at 25 is a very bullish indicator, tells you that it is ready to continue, opposed to needing to consolidate or cool down. So now we're getting higher high, higher high, higher high, and we have just formed another higher low right at 25, which is exactly what happened right here after breaking through this consolidation. And then we've got the same thing right here, break through this consolidation and find support at 25. Very bullish, tells me that we're ready to continue, and also shows that we're not exhausted. I will be watching for this to create another higher high and get to prior areas of major resistance in the about 75 to 80 area to indicate that this thing is needing to cool off. So this is more important to me than the TD sequential. Seeing the green 8 tells me to be on red alert of exhaustion. But this is telling me it's okay. We've still got plenty of room to go, and this would indicate that the most likely thing to happen on the TD is a 1 to 4 candle correction, or just a new count immediately starting like we saw last time. So that's my analysis of Bitcoin. What are you thinking, Tyler?
How about jumping out to the daily?
All right, you got it.
And keep the ADX up. Yeah. Interesting.
So it has just crossed 20, which can be used instead of 25. Crossing 20 is often the boundary line when using this indicator to say that there is a trend versus there's no trend.
Right.
This is showing the first signs of just the beginning of a new trend. And we can throw on the TD sequential, and it is saying the same thing, having just taken out this 9 and in a big way, that is indicating that a new trend could be starting to the upside. You'd want to wait for confirmation on the TD for a green 2 above the green 1, and you may want to also wait for confirmation for this to get above 25. But this is painting a pretty clear picture to me that there's plenty of room left to the upside after breaking through a parallel channel, kind of like we saw back in here.
Yeah, terrific. Very good. And how about just the weekly for a second also?
You got it. So that one is now green 2 above a green 1, taking out this TDST level, which held us down for about a month. The ADX is now starting to get interesting. It has created a higher high, but hasn't gotten up to where I have identified as historical areas of exhaustion around the 50 area. So this looks like it still has a little room to go, but not much. And that's actually something that is very interesting when looking at the TD sequential as well. Now, this is something I've never really heard anybody talk about, but in my experience can be a really powerful indicator, is when you get 3 9s in the same direction on the weekly chart. So if you're looking at the weekly chart and you're looking at 3 counts in the same direction, to me, that is a big indicator to be on red alert of this thing being really exhausted. I can't remember seeing 4 9s in a row. I know that it's happened, but I just can't remember seeing it myself. Whereas I can remember a number of situations where we got 3 9s on the weekly chart in the same direction, up or down, and then we eventually from there we're able to correct. So that is kind of what the ADX is showing too, is it's getting up very close to exhausted territory while we are now starting this third count to the upside. So that's something that to me is very important, and I will be paying very close attention to. If we get a third green 9 and this ADX is up around 50, then that will be a huge indicator to me that this thing is needing to correct in a big way. So that is something to pay very close attention to. Anything you're seeing there? Anything else to add?
Yeah, no, that's very interesting. Tone's been talking about 2 9s in a row, and he said he's seen on rare occasions 3 9s, but I believe he said that's almost the end of that particular move, or the leg of the move at that point, because it's such a rare phenomena. So that's interesting. Maybe just one more, if you don't mind pulling up the monthly, and then we'll go take a look at Ethereum.
Yep, I was actually just getting ready to do that. There was one thing that I wanted to take a look at. So let me get out of this, get over into a little bit of a cleaner chart. And let's take a look at the longer term stuff. Anything specific that you were wanting to examine?
One, two, three. So on the sequential here, we're on a 4 now. No, we won't be on a, yeah, we are on a 4. We got a sequential 13.
Wow, look at this. This was 3 9s in a row on the monthly chart. I don't know if I've ever seen that. That is insane.
Wow. Incredible.
Wow. That is incredible.
And how about just a quick Copic curve?
Okay. Let me get that out.
And then maybe the ADX, you were looking at that yesterday. That was pretty interesting.
Yeah, I definitely think that ADX is interesting. Seeing this starting to flatten above 25 is kind of like we were just looking at on the 4 hour. That would be a big sign. These never crossed, according to the monthly ADX, we never got a bear market. This has been a bull market the whole time. And finding support above 25 with the plus DI above the negative DI is very intriguing. Copic curve looks like it is just under 0 and flattening. Let me make that a little bigger. Okay. So we are starting to turn up, and
from very low level, yeah. So that's pretty impressive.
That's almost historically low levels.
Yeah.
Something else that I was just made aware of. I don't usually follow the MACD very much myself, but it definitely can be a powerful indicator. And what we're seeing here is certainly very interesting. Buy signal getting across the moving averages and getting the histogram crossing back into bullish territory. What do you think about that?
I think that's very, very important. It's been climbing, you know, for the last 4 months, but the histograms are still negative. And it's neat the way it's calculated, just the difference between those two lines. But it's neat to see when a top is in or a bottom is in, and you begin moving the other way. The question is, are you going to keep going? And it looks like this chart is very consistent. You don't cross that 0 line from above to beneath or beneath to above with a bunch of stutter steps. You know, once a bottom is in or a top's in, you move on a monthly basis all the way down to the zero line, then you keep on going, or all the way up to the zero line, you keep on going. So I think that this green histogram chart that we've just seen this month is very important, and could very well indicate the beginning of a move, not the end of a move.
Yep. And we see that came in back here, January 2016, December 2015. So this is the type of thing here that is starting to indicate a long-term trend. We have talked a lot about the short and medium-term trend being bullish, and at what point does the long-term trend become bullish? Well, now we're getting some interesting indicators that are suggesting the long-term trend is on the verge or just now starting to turn bullish. We're looking at the MACD on the monthly, getting this first bottom signal since the end of 2015. Yesterday, we looked at the Ichimoku cloud on the weekly, which is what I use to determine long-term trend. That is getting very close to breaching the cloud after having a bullish Kumo twist and a bullish TK cross. We looked at the Copic curve. If it crosses above zero after testing historical support, that would be another indicator of a long-term bullish trend. And then also the ADX. It is now starting to flatten out. It still hasn't yet, but it's shown the first signs of rolling. And if that does roll and turn up above 25 or even above 20, then that would also indicate a long-term bullish trend. So seeing some very interesting indicators out of some powerful long-term trend identifiers.
I agree completely. And I made the comment about a week ago that if we can break through, I disagree a little bit about the 10,000 to 11,500 area. I think it's more significant, but we will see. The market will prove that correct or incorrect. But I said if we can get above 10,000 on a closing basis, I really mean the range or the field between 10,000 and 11,000, that would be enough for me to say that the long term is in. It's very interesting that we see a half a dozen other long-term indicators that have just given signals or are about to give signals of the same thing. So very interesting times, great charts. Why don't we take a look at Ethereum? I had fallen asleep on that, but you noticed that something pretty big happened today.
Yep, we sure did get a big move in the last 24 hours. Yesterday, right before logging off, I briefly pointed out this candle that was very interesting to me. It took out this trend line, and it also took out these highs here. So that was something that I found very interesting. I didn't buy that because I was already in. I have been buying over the last week or two. And for those that follow me on TradingView or Twitter, you're well aware of all the setups. And then I think we also covered this action back in here on this podcast. And for those that remember, you can maybe see this Wyckoff accumulation that occurred and followed shortly after Bitcoin went through the same pattern. So seeing an accumulation pattern on Bitcoin and then seeing it work, Bitcoin had broken out and Ethereum was still back in here. That gave me a lot of confidence. That's what I really like seeing is leading and lagging pairs. If I have a a coin that's leading and then another coin that's painting the same pattern, but is a little bit behind and hasn't quite confirmed, then that is something that really jumps out as me as potentially an opportunity to bet big. So here we've got preliminary support, selling climax, automatic reaction, it would be right here, secondary test, and then right here is the spring. We break down the support lines, and then after the spring, we get the higher low. So right here was the first buy signal. I did take that and then waited for a break of the market structure and another higher low. So we broke through here and pulled back right here, kind of got a flagging pattern. That was the second entry based on the Wyckoff accumulation. These are the two places to build long positions, and I took both of those. And then the other one that I have been keeping my close eye on is this same sort of flagging pattern that we have seen on the other pairs. We saw this on Litecoin. We saw this on Bitcoin. It's got this spike up, spike down, retest here, come back down. And then on that third test of the flagging pattern, it breaks through. This one was a little weaker because it didn't have the higher lows that the others had. The other two had a nice higher low right here. This one didn't. Instead, it pulled back, and it was actually a bit of a bear trap, because right here, take a look at when it was like that. What do we have? We had a head, a shoulder, and neckline, and a close below. So this candle was actually strongly indicating that it was getting ready to correct. When that didn't happen, that really made me perk up and think, okay, perhaps this was a trap, and now this is the flagging pattern. So that is what I have been posting, and we also talked about this on the show in terms of potentially using the parabolic SAR to help indicate when the pattern has been confirmed, because back in here it looks like you could be using the closes to draw something like this, and it looks like the pattern kind of confirmed back in here, and that's actually what I thought. I was buying right in here, using this parabolic SAR as confirmation that this area did really break down when it was very tricky to figure out exactly where to draw it. So I used that parabolic SAR and was buying in here based on the flag pattern and adding to my exposure from the Wyckoff pattern. And I am viewing this as a flag with a parabolic pull. So I am measuring the move like that. And it is giving me a target of $400, which is right in line with prior horizontals. And that's something that I absolutely love seeing, is a pattern giving me a target that matches up with horizontal resistance or support. That is exactly what is happening here. And the last thing to show is this parallel channel. It looks like we could be on the verge of breaking through the top of it. And this is a similar situation where I was just talking about having leading and lagging pairs. Bitcoin just broke through its parallel channel, right? It had the parallel channel that we were just looking at right here, and now Bitcoin has broken through it. And now we look at Ethereum, and it is painting a similar pattern, but lagging. So it is in this parallel channel that can be drawn a couple different ways. I like using this as kind of the median of the channel, and using these higher lows back in here as the angle. We see that caught this wick and this wick perfectly, and now we are pulling up and testing it right here. So this is how I am drawing it, and yet again, it's kind of similar where it had a parallel channel back in here, broke through it, made a nice move. Now we've got another parallel channel. It didn't make near as nice of a move as Bitcoin, but still is showing that it has similar patterns and that it is lagging. So now looking at this, this potentially could be providing an entry. I'm already in, so I'm not needing to add, and I'm not going to. But if this thing does close above, say, I would say 295, if it takes out this wick with a close above it, and then closes above this parallel channel, that would be something that I would be interested in buying if I wasn't already fully exposed to this market. So definitely going to be keeping my eye on. We see that when Bitcoin broke through its parallel channel, it did it with this flagging pattern. I mentioned how it's different because it had a higher low, which was stronger, but still it's a very similar setup. You've got a flag below the top of the parallel channel, and that is what we're seeing here, even though this one doesn't have a higher low. Seeing a flag below the top of a parallel channel. So I'm very intrigued by Ethereum right now, and seeing Bitcoin make a big move, and it's still behind its similar area of resistance is something that I want to be paying very close attention to see if it isn't able to break through. Then that is a very significant sign, and something I want to pay close attention to, the ETH BTC pair. If that wasn't to happen, then there would be probably a big move happening there. So that is what I'm looking at on ETH USD. Anything jumping out at you, Tyler?
No, that's great stuff. It sure looks like it wants to get up to that green overhead resistance at some point, which is similar to the 6,000 area on Bitcoin. And Bitcoin had no trouble cutting through that. So that will be very interesting to watch.
Yep, and that's a very, very good point, is you can start to see how far behind Ethereum is. Bitcoin smashed through the support that held it up in 2018 and is all the way back up to like basically these areas, even maybe a little higher, close to 50% of prior all-time highs. Yeah, so basically right about in here. And Ethereum is way back in here. So that is a very interesting divergence, which something to definitely pay close attention to. All right. It sounds like we're probably ready to move on. I'll just show a quick Litecoin chart. I was buying Litecoin yesterday. Was originally leading, and now it appears to be lagging. It really hasn't made any move over the last 48 hours or so. It's been trapped in this range while Bitcoin has made a significant move. So seeing that is something that intrigues me greatly, being that it is going through a halving in August, and that is coming up very soon. So there isn't much time left to get positioned before that occurs, and this could be a really good opportunity. What we're seeing right here is higher lows on the 4-hour and horizontal resistance, but it looks like it's starting to weaken because notice how here we got a double top. But here we actually did break through it. Even though it didn't close up there, it broke through it, and the response seemed to be another higher low. So if this took out this low, then that would be a very big bull trap. But since it didn't, that's telling me that support is continuing to move up. And as long as that happens, resistance is going to really struggle to maintain, especially if Bitcoin is continuing to creep upwards. So seeing this action here is something that is very interesting to me. I think yesterday I mentioned, let's see here, the entries I was looking at. I think it would have been this candle right here, right? Maybe it was this one right in here, seeing come back to the 50 and then closing above the short-term MA. That's what I was paying very close attention to, and mentioned that I was using the 5-minute chart to help time my entry, and we had broken above the 200 EMA right here and pulled back into a golden cross right here. This is just like the perfect setup for me, seeing a breakthrough and then a consolidate, a pullback into this cross. We get the cross while the price is still right on top of it. So that was my entry, and I definitely pulled the trigger. I then drew this trend line and wanted to see that hold up. It didn't, but it sure looked like it was ready to take off. That was that wick that we saw on the 4-hour. So having this be responded with another higher low is extremely important to me. And tells me that this thing is about ready, and it would be a very good time to pay close attention to it. Getting a 4-hour close above 139 would definitely be a buy signal for me. I've got significant exposure. I do not plan on adding, but that would be what I would be looking at if I was wanting to add. And real quickly, just zooming out, we do see a pretty nice hyperwave fractal that has been forming on Litecoin. The phase one is rather short and kind of weak. It would look much better like this, but it's still fine. I like this phase two is just beautiful. The phase three is holding up very nicely. So if this thing did break down this low here, I wasn't going to be exiting my long. I was looking at this area for trend support combined with horizontal right in here. So that's what I was looking at before thinking about exiting. And now what I'm really wanting to see is a phase four type move in the weeks leading up to the halving. That would just be the ideal setup for me to sell the news after buying the hype. The people that wait for the halving to go through will be usually late to the party, at least for the very short term, the immediate reaction that will follow. So that's what I'm really hoping to see is a phase four type move establish itself in these next weeks leading up to the halving, which would really get people very emotional and afraid of missing out while that is occurring, and would be ripe for a major correction in the short term right after that. So anything to add there, Tyler?
No, that's really interesting. A number of people have been talking to me about these hyperwave looking fractals, and I've just never really studied them or taken the time to study them, but it's amazing how many of those are beginning to show up in a lot of different ways. So that's a whole new area of research, I think.
Yep, I couldn't agree more. One other thing to point out is we're seeing these parallel channels in Bitcoin and Ethereum and in Litecoin. Ethereum's testing the top of its. Bitcoin has broken through. Litecoin is back in the middle of its range. So we kind of can get a picture of who's leading, who's following, and then who's lagging the most. And for if this pattern is to hold and we're to shoot through the 140 area, then this top boundary is where I'll be paying close attention to. If it does break through this top boundary here, then I'll be highly confident that phase four is starting. So that is what I'll be keeping my eye on there. Do you want to take a look at the stock market now?
Yeah, why don't we do that? I'll pull up a chart of we'll do this one over here. This is actually the gold market. We'll get back to that. Here is the S&P 500 going way back. This is a 4-hour chart. I'll take it back up a little higher to the weekly to get an idea of what a long-term uptrend looks like after an intermediate term bear market. We actually had a tremendous long-term trend in the stock market from the beginning of the 1980s, 1980, 81, right after Volcker did his thing with inflation. We started all the way up to 1995. It doesn't look like much, but that's a big move. And it took many years to get there. Basically, back in the beginning of 1982, we're sitting below 100. And then we ran up to 300 by 1987, or a 3x. And by the time we got into the dot-com bubble, we had run up to almost 500. And then from 1995 to the year 2000, those were the biggest 5 years in stock market history. And we basically went from the 500 level all the way up to 1,500 by the top in 2000. So from the very beginning, you can see that this trend was unbelievable, and you can also picture the huge angular moves between here and here, and then between 1995 and 2000. And we throw these numbers around of years fairly loosely, but this run up from 1995 to the year 2000, that's 5 years of 23% compounded rates of return in an asset class that averages 10% over the last 150 years. So it was moving up at almost 2.5 times the normal movement. And then what happened is we go through a 3-year period from 2000 to 2003, which is a long-term move, but not relative to the 20-year move in front of it. And that's one of the interesting things about talking about long-term moves or intermediate-term moves. It's sort of relative to the asset class and relative to recent performance. Because after this 3-year drop, we then had a 4-year upswing and did not quite make it, just barely made it up to the old highs. So a round trip from 1,550 down to half of that and back up to 1,550, and then all the way down to 650 in a very short period of time. It basically only lasted 2 years. But then that started the longest consecutive year after year bull market, basically in US history. The one we looked at back in the 80s was actually longer, but it was punctuated by some weird stuff like the crash in 87 and a couple of other things on the way up. Here we've had 2 little periods in 2011, 2012 where we kind of went flat, and again in 2015 and 2016. But other than that, it's just been a great run. So almost everyone was thinking that as we got into this wild short-term action, and you can't really consider it anything more than short-term, you're even pressing to talk about intermediate-term moves, but on a weekly basis, here for about 2 or 3 months you dropped, and then for about 5 months you went back up. And then from September to December, 4 months you went down, which is intermediate, but not much more than that. And then finally straight back up, slight higher high until this week. And we went slightly higher again by the close today. And it was based on this move and this stop and reverse point being taken out, which the week before it had not been, and the turning up of the long-term moving average, which makes Consensio fully bullish, that I decided it was time to put the other 50% back in. Now remember, we were out of the market through most of this. After the third week, going between the second and the third week, we got 50% back into the market. We didn't put the other 50% in until April. And then we ran up, we did barely hit a new high, and then we spent the last 5 weeks coming down, during which period, because we had the short term breaking below the intermediate term moving average, and I'm using the 2, 7, and the 30 weekly moving average on this weekly chart, and the price broke down through the intermediate term, and the intermediate term broke down. For all of those reasons, I got back into a 50% long position, 50% cash. So we've held that for almost a month and a half until this week. And this week, this new high, plus taking out the stop and reverse point, plus the moving average moving up, gives us a fully bullish posture. Now, we had a fully bullish posture right up here. We had a fully bullish posture right up here, and they did not work out. And we took the necessary steps to protect clients' assets, because you did not know if this was the end of the bull market. It turned out it wasn't, after a fairly small pullback, and then we went to new highs, and you did not know if this was the end of the bull market. And the bull market I'm talking about is the 10-year bull market from March of 2009. And then we really slammed down and scared the willy out of everybody, including myself. Luckily, most of that drop, we had already taken defensive action because of all these lines turning down, including the long-term moving average. So we had 50% in the market, but we had inverse positions on the other 50% of the account. So if this had turned out to be the ultimate top of the longest bull market, longest economic expansion in US history, we were prepared to write it down and maybe even go net short. We didn't ever go net short on this move down, even though we did go completely flat back in 2007, 8, and 9, because that really turned into something pretty monstrous. This was only a 20% drop. Back in 08 and 09, most of the indexes were down 50%. The NASDAQ was down 80%. Okay, so then we recovered. We got back in step by step until we're finally fully in. Now, many people will say, oh, great, you're fully in at the top. Well, yeah, but that's what everyone says after you've had a big run. You think this is the top, and you think this is the top. We've got a lot of evidence now that this is not a top. And we've talked about a bunch of the things. We've talked about the cup and handle, even though they're V-shaped. We talked about the inverse head and shoulders. We've talked about taking out the stop and reverse points. We talked about the long-term moving average moving up, all of those things. So where is this thing going to go? Well, I've had a target for a while of 3,300, which is up about here, and I expect that to occur this year. But just because I expect it, and I've got technical signals that say that might be happening, doesn't mean it's going to happen. And that's true with everything. That's true with Bitcoin. That's true with gold. That's true with every market there is, that you can have all the technical and fundamental indicators indicators on your side and it still doesn't work out. And you've got to know that going into your trades. I love buying new tops. I love buying breakthroughs of long-standing overhead resistance. And we will see that theme again when we talk about gold in just a second. I don't like it when you're buying new tops and you have to go through this. And you often do. Just be prepared for it. Be flexible. Be very disciplined about what systems you're using. And don't fight what they're telling you. The only way this thing is going to go down from here is if these moving averages are broken to the downside, and they're all getting very close. And I love that also, because that means you can put stops below a lot of these things. So this is a great time to be thinking in terms of consensio. But in any case, we have a green 2 above a green 1 now. We are on a C13, but so far that doesn't seem to be having much of a pull. And we are on a 10 on the countdown, which means we've got 3 more weeks to go. We've got a long way to go on this one. We'll just have to see what happens. But I didn't want to stay on the outside of this any longer, because it wasn't just the S&P. We've seen this kind of movement in a lot of the big indexes. One of the things I've really liked recently, and we hadn't seen it before, is the Dow Jones Industrial Average on this week's high was 26,907. Back here, even though it's a red candle, the high was 26,951. 26,907. This one was a little bit higher, but you can see that the close here is, this is 26,743 close, and here we are at 26,719. 4 points difference where we're sitting right here and all the way back at the beginning. But notice that here, where everybody else jumped to new highs briefly, the Dow didn't. And that was pretty disappointing to me because of Dow theory and other things. So now we're getting not only the 30 stocks in the Dow along with the 500 stocks in the S&P, and all of a sudden you've got more balance. And the balance isn't coming, or the growth is not coming only from the FANG stocks, because basically there aren't FANG stocks in the Dow. They're, a lot of other stuff, but they're not really the FANG stocks, as opposed to the S&P and the NASDAQ. So in any case, that's why we took the action that we did today. Any observations on any of that, Socrates?
Not a whole lot to add. That was great analysis. I guess I would add that the trailing stop on the broadening top was also just taken out on this weekly close. So that would invalidate the broadening top pattern. And that is definitely important to me. What else is important is that basically the only way I believe in triple tops is if it is through a broadening top. Triple tops just don't really seem to be a way that markets reverse. If a price resisted one time and then 2 times, and then we again come back to test it for a 3rd time, the only way that I would expect that to actually hold as a topping pattern is if it was a broadening top with 3 higher highs and 2 lower lows, which is exactly what we got. And now that we have taken out that peak and taken the most recent peak and taken out Tyler's trailing stop loss, That tells me that the broadening top is no longer in effect, and now we're looking at basically like a quadruple top, which in my mind is highly likely to break to the upside, especially because it's after a very nice higher low. Seeing that higher low there shows that support has moved up significantly and resistance is continually being eaten away at, just kind of like an ascending triangle in that same sense, even though this is not one. That's how I think of like a quadruple topping pattern. That fourth time we get up to test that after a very convincing higher low leads me to be very confident that this should break through to the upside, follow through, and reach Tyler's target of 3,300. I might even go to like 34 based on the cup and handle, 34.50, something like that. So yeah, I would be very interested in putting money to work here on buying this breakout based on what Tyler's looking at. That most recent pullback found perfect support at that long-term moving average. That would have been the ideal entry. Since that didn't happen, now we're still in a spot where I'm not feeling like I missed out. We just recently took out the weekly parabolic SAR, and we've got a green 2 above a green 1. Both are strong indicators of the beginning of a trend, opposed to an exhausted trend. Even though prices are at all-time high territory, this is not an area where I'd feel like the price has gotten away from me and I need to wait for it to come back. This is an area where I more feel like I want to see follow through and really not much pullback at all.
Great. That's a great observation. I'll just say one thing for those that really haven't had much exposure to broadening tops, or what we call the Selgin system. This was a 7, 6, 5, 4, 3, 2, and a 1 back here. And when you get a 7 with a correction down, basically the candle to the left of the peak and the right of the peak need to be lower, which this one was. Then you begin a series of stops. And when those stops are taken out, that simply means this 7 is going to be higher. And let's just assume that this 7 is going to end up much higher, say 3,300. There could be a number of false signals along the way to 33 or 3,400, but they will still be part of this same overall pattern that started all the way back in 2017. So you've got to be on your toes that if we go up a couple more weeks, even to 3,000, 30.50, and you get a week in which the candle to the left and the right of it is lower than that mid candle, that will give you another 7, and then you have to go through the whole exercise again of putting stops in and then waiting 5 weeks before you begin breaking them down. And the reason you do that is because this is actually a buy signal down here going up. And at the same time, we had a sell signal up here going down, and one of them is going to win, and the buy signal going up is the one that won is still in force. Therefore, this can go higher and higher and higher and higher, but you've got to be on the lookout for the end of a broadening top. And hopefully we don't get a number of them. Sometimes you do. Sometimes it's very clean, and you just keep on going up to wherever you're going. So anyway, great points. I am going to pull up gold because we had a similar look at the gold market yesterday with a similar kind of thinking by me with a couple of differences.
And
so
while you are pulling that up, there's a question that I will answer really quickly. We actually got tip from John Smith, and
Cool.
asks, are your daily TD numbers offset by a day from tones? And I can say that for myself, I use Tone's specific TI indicator that he invited me to specifically, and I have not changed any of the settings. So I know that I am using the same indicator that he was using a few months ago, unless he has changed his settings, which I do not believe he has. Then we should be using the same one. But the one thing to consider is that sometimes different exchanges in crypto will have different counts based on slightly different closing prices. The counts can get offset on some exchanges. So if you are seeing that the counts look offset, check different exchanges to see if that may resolve it. So go ahead with the gold.
No, that's very good. And you'll notice that Tone actually brings up 2 or 3 different TD indicators, the sequential and others at various times. So you've got to sort of be alert to that. All right. So what I wanted to talk about is, just like we did on the stock market, I want to talk long-term and long-term moves versus intermediate-term moves. This goes back to 1998, and we talked yesterday. I'm going to just pull up a monthly for a second. A lot of people, oh, rats. I guess it won't let me go back before that. Well, I can tell you what happened. 1998, if you go all the way back to 1979, we were at $880 at the peak. And then all the way to here, we dropped from $880 down to $265 before we started this big move up. And those that had been buying gold back in the 1970s had to basically wait over 20 years before we got back to the prices that they had seen. We did that in 2006, 2007. We got back up to $800. But from a bull point of view, we had a tremendous bull run from $265 to $1,900. And it was punctuated by some big corrections, as every market is. So far in this Bitcoin run up that we've had, we haven't had any corrections. I mean, we had that one day in which we dropped from 8,200 down to 6,200, but then closed all the way back up again. But other than that, it's very unusual for any asset class, including Bitcoin, to correct any kind of a long-term move with a number of intermediate or short-term down moves. Here in gold, you see a number of them: 1, 2, 3, 4, 5 into this support, and then it finally broke, went back up to the underside of that support, came down. But then for the last 5 or 6 years, it really hasn't done anything other than go sideways. So there are those people that if you are trying to trade gold, you could be trading it from the short side down to this point, which is a pretty good run going from 2012, 2013, all the way to 2016. So, that's a 3 or 4 year bear market. And you may or may not have caught this run up or this run up. But if you've been trying to play this from a long-term perspective, you've gotten nowhere. It's called being whipsawed. That's the term used on Wall Street that means you get out because it's going down. You try to buy in, you have to get out. You go back in, you have to get out, you go back in. And that's gone on for years. You know, that's gone on for longer than most people in the crypto market have been in Bitcoin. Because most people that are playing in the crypto market have only been in for 2 or 3 or 4 years. So what I'm saying is that at the end of a big run up, if it is a true hyperwave, you're going to go all the way back down. If it's not a true hyperwave, what very often happens is long, long periods of consolidation at some level. And what you're doing is you're looking for the opportunity when that level either breaks to the downside or the upside. So lo and behold, we've been saying for a very long time, we, in this case being Tone Vase and myself, he's been very bearish on gold. I've been more neutral. I've been in on the long side on a couple of occasions where he's been very bearish, and I had turned very bearish because I was so exhausted by once again this thing being turned down from the $1,380 level and coming back and breaking 1,200 again. If this had just gone a little bit further, I'm quite certain it would have taken out this trend line and it could have gone to 900, 800, 700, 600. It did not do that. It's done the opposite. So you've got to be flexible. You've got to be disciplined. You can't marry a position with your beliefs. You've got to be open to not only the strategic, but the tactical moves. In other words, the long-term moves as well as the intermediate-term moves. So we went long today, and we bought not only gold, but we bought gold mining shares, and I also bought junior gold mining shares. Now, just a couple of days ago, I said I wouldn't do that. But I spent the last 72 hours, and I believe that the gold miners, I'll just show you real quickly. What I'm going to try to do is I'm going to go GLD divided by GDX. When this is going up, that means gold is outperforming the gold mining shares. And when this is going down, it means that the mining shares are outperforming gold. This is a monthly chart. I'm going to go to a weekly. And what you see is that the gold itself had been in a long run from here to here outperforming the miners. And now it's begun to underperform the miners. But when you look at just GDX by itself, you see that these last 4 weeks have been very impressive in terms of the size of the move from 20 up to 25, or a 25% move. 20 to 25 is $5 on 20. So that's a 25% move in the last 4 weeks. Whereas gold itself, is measured by the XAU, has gone from 1280 to, let's call it 1400. Much less of a percentage move. And that got me thinking, well, that's interesting. Because one of the things you expect for the gold miners is that they've got a greater volatility or greater beta than gold itself does. If gold goes up X, they should go up something like 1.5X to even 2 or 2.5X, depending on a number of things. But they tend to do it and hasn't done it for a long time. So we did put some money into that. We even put some money into this one, which are the junior miners, the GDXJs. And here, similarly, you've had a very nice move from 27 to 35 in the last 4 weeks. You've got higher lows than we had back in December. And we have just taken out this setup trend line and a bunch of other neat things like the stop and reverse points were taken out. Long-term moving average is moving up, even though the intermediate hasn't yet cut above it. It will in the next several days because the speed with which this is moving up. So for all those reasons, I decided that we would buy the bullion, which is about the only thing I've been interested in for a long time. But we're also going to take, and did take today, positions in mining shares. We did not buy any silver. And silver, Socrates did a great job looking at silver versus gold yesterday, just real quickly. Silver's really lagging behind, as you can see. So we'll wait on that. The jury is out. We did some charts with gold versus silver, and silver is looking unreasonably weak. The spread between gold and silver is at the highest level in history right now, with silver being on the weak end of that relationship. So Saifedean went into a lot of detail, and Tone has also that silver is falling out of favor in the monetary system relative to gold. I didn't buy that at first, but the more I thought about it and what I'm seeing on these charts, I think they're both right. In any case, we didn't buy any silver. I'll pull gold back up. Socrates, if you've got anything you'd like to say about it.
Yeah, I've got a couple charts that I could share.
Okay, let me jump out of this, and you're on.
All right. So there was a very interesting chart posted in one of the Hyperwave Telegram groups by Barbara. So I wanted to go over it very quickly, and it's just showing the gold prices against the US dollar, against the euro, and against the Japanese yen. So we see that it broke through this June 2016 high on the US dollar over the past day or two. But the euro, it's still behind, and so is the Japanese yen. So I found that to be a very interesting chart, and one that we can potentially just take a quick look at and see if anything has changed since that was posted, because that was this morning, and there's a decent chance that the other markets are starting to catch up. So let's take a look at gold against the Japanese yen. Pulling up the weekly and taking a look at, must have been, okay, this is certainly a very different chart than I was expecting to see. This is not nearly as similar to the USD pair as I was thinking. So what I'm going to do is pull them up side by side, and that will just take 1 second. So that was very interesting to see how different that is. So I think this will be important to go through. Just
yeah, I agree, because the strength of the dollar relative to the euro and to the yen has been remarkable, and therefore you would expect you would expect
doing much better against those other pairs, wouldn't you?
Yeah, that's very funny.
Okay, so we've got and what is rather interesting is how close this is to the all-time highs against JPY, against the Japanese yen. I mean, this thing is near all-time high territory, which is
Yeah.
mind-blowing to me. So this is definitely something that will require further analysis. Thank you again, Barbara, for sharing. So now we're pulling up the euro pair and get this off of here. So the fact that maybe this is behind, the Japanese yen is behind a corresponding level of resistance, maybe is made up for by the sense that it's so close to its prior all-time highs. So with the euro, we should get a little bit more of a similar picture, and we do. So here we do see that it is below its corresponding level of resistance. It did close below, and that is the June 16 resistance. And I am now getting messages that my screen share is not on. Son of a gun. Sorry about that, everyone, but all that was really pulling up charts, so there was nothing that you missed. What we are taking a look at here is the gold versus the euro and the Japanese yen, and the corresponding levels of resistance. Looking at June 2016, we see the US dollar has closed well above that area, but down here the euro pair has not. It is wicking down and pulling back from that area of resistance. And on the Japanese yen pair, let's see, we notice that it's actually hugely above its July 2016 resistance. So this is actually...
Well, and it's almost back to its all-time high, which was 1900 on the US dollar. I mean, it doesn't have that far to go, and gold will actually be hitting highs against the Japanese yen. That is remarkable.
Isn't that incredible? Yeah, and it is. So yeah, it is painting a very different picture against the Japanese yen, which that is absolutely very interesting and makes me just very quickly want to pull up USD JPY, which we, I think, had looked at briefly in the past, because it is painting a big pattern, which it's very interesting that the US dollar is now pulling back against the Japanese yen, while gold is getting very close to the all-time high against the Japanese yen. That's very interesting, and something that will probably require more thought. But this is definitely a large symmetrical triangle that is clearly very important support and resistance. And it looks like this week is now just going to be closing below this. So definitely some big things are happening from a macro perspective. One other chart to share real quickly for gold, and this is just kind of a fun chart. I am not an expert at Elliott wave by any means. I barely know the difference between a 3 and a 1, but it is something that I like to play around with. Especially when breaking through significant boundaries. It can help me to just get an idea of how I expect price to proceed. So definitely take this with a grain of salt. It's just kind of a fun chart to share. This kind of jumped out at me right here is looking like a 1 and a 2 count. So seeing this action here is what made me think, I wonder if we could get a full 5 count to the upside, and if so, what would that look like? So I went ahead and drew some fibs to help identify areas of support and resistance. And if we are breaking through 1400, then I'm expecting to come up and retest 1530 to 1580. That would be my next target. And that could provide us with a nice third wave. A pullback to this 50% fib would make a lot of sense in my mind. And then a retest of near the all-time high levels before getting a nice ABC correction. So again, definitely not a prediction by any means, just a fun chart to help me kind of give myself a visual of how I think this thing could proceed. So again, take that with a grain of salt. And if you don't have anything else to say, I'm going to pull up the Lira very quickly.
Yeah, great. I'd love to see it.
All right. And well, I lied a little bit because I did want to show the relationship of gold to silver, like you mentioned, that has created a new all-time high, and it has continued to rally. And right now it is actually on a green 9 as well as an aggressive 13. This is something that I have been paying close attention to. We're getting a parabolic curve that, like Tyler said, this could really be signaling a major shift, that silver is falling out of favor as a monetary standard. And if central banks are buying gold and they're not buying silver, then that could be why this chart looks this way. That could be a ton of demand for gold that just isn't there for silver. And if mom and pops are and institutions are the ones buying silver and central banks are the ones buying gold, then that would be a lot more firepower on one end of the spectrum. So taking a look at the Turkish Lira, I love today's close and am very happy by what I have seen over the last 24 hours or so. This phase 3 trend line continues to act as very nice support. Right now I'm liking it, connecting these wicks right in here to this correction here. So the wicks on about the end of January 2019 to the April 1st wick. And then we are seeing these last 3 candles wicking off of that area. This was definitely very much in danger of breaking down. I was having my finger on the trigger for a stop loss, and basically was yesterday, the price was right here, was below my phase line. And if the price didn't increase at all today, if it just basically stayed flat at about 575 or fell at all, then that would have been a weekly close below that phase line. We can see that right there, if we just would have stayed there or kept coming down just a little bit, the weekly would have closed below this and I would have been fully out of my position. And instead, we got this beautiful candle today where it looks like it is creating a higher low, and it is taken out this whole candle, the wick close above. And now it looks primed for sort of a W continuation, where it goes something like bam, bam, bam. Something like that is what I really like to see. When testing a phase line or a trend line, it makes this kind of where it looks like it's making a lower high, which can fake a lot of people out. When this this apparent lower high can often be also in line with this trend line. So it looks like we're establishing a bearish trend line. We get a lower high and then we come back to this phase line right here. That can be kind of scary and can fake a lot of people out. And then when we turn around and create a higher low from here, then I would expect us to come up and kind of continue to trend and get back up to the 620 area for a retest. So that is what I would be expecting here. I would really want to see this level hold of 572. I wouldn't even want a wick below it. And would really want to see price continue to move up from here. And if it did even come below this area briefly, then I might even consider front running the stop loss, the weekly close below, because right here is a very important area for me to establish this higher low and continue to rally off of this phase line. So a very crucial point for this chart for USD TRY, and a very crucial day that makes me feel confident we are going to continue to the upside, whereas yesterday it was anybody's guess. So that's my analysis there. Anything to add?
No, that's terrific. This has been going on for a long time with a lot of political intrigue. There's a new election for mayor taking place because they threw out the old one. There's been all kinds of controls on the ability to get out of lira into dollars. There's been all kinds of controls on the transaction costs, trying to short the lira. So it's been a fascinating study, and I can't wait to see how it ends.
I couldn't agree more. It has been a very unique environment, and it's been a great place to trade, and also a great place to learn. And like you said, it will could potentially be a case study for years to come. From my perspective, everything they've been trying to do to prop this thing up, I'm talking, when I say they, I mean the Turkish central bank and Erdogan, everything they're trying to do to prop this up is only hurting it. And from what I can tell, every stab that they take has been a backfire. And in that sense, this could go down in history books as a bit of a case study for what not to do when your country is entering some inflationary environments. So absolutely fascinated, very interested to see how this turns out. And with that, I think we can wrap this up, and I will get off screen share. I will thank you for having me on, and I will look forward to seeing everybody tomorrow. Is that right?
Yep, that sounds great. Very good. Thank you, sir.
Nope. Tomorrow is Saturday, so we will be off. And
that's right.
Actually be playing in a golf tournament myself. So wish me luck. Win all the money.
Great. Very good. All right. Thanks a lot. Bye-bye. Thank you, everybody.
Bye. Thank you.